All right, guys, how's everybody doing? Let me share my screen. I want to go here, share screen. Hopefully you guys are seeing my screen. Good morning, everybody. Somebody give me a sound check. Let me know if you guys hear me okay. All right, great. Thank you, Keith. Thank you very much. Okay, we're going to start in just a second. I want to just give me a second. I'm gonna put you up on my other screen so I can watch you. Good morning, Ahmed. Good morning, June. Good evening. Give me just a second here. I want to make sure that I'm all good here on all screens. Hi, guys. Hi, everybody. Everybody have a good day. We have a nice day in front of us today as far as trading goes. We obviously have Nvidia earnings at the end of the day. That's going to be a big rock and roll show for Nasdaq. Looks like market is mildly negative, but feels like they kind of want to ramp it as the day goes by, on the assumption that Nvidia is going to be strong. Nvidia, of course, is the axe in the market these days. It's the bull. I read today at Bloomberg that there's something like $200 billion worth of exposure on the Nvidia trade just for this quarter. Market is 8.5% wide on the straddle, so looking for lots of volatility. So, those of you who are trading Apex, and I just put in the discount, the massive discount that Apex is having. It's actually an 90% discount. I have an old link, but use that link. You're going to get 90% discounts. You can buy the $250,000 account that I'm trading right now for as little as $16. All of that expires very quickly, so lock it in when you can. But this is one of those things that makes a perfect event for an Apex passing past the eval trade, because if you're going to believe that there's lots of volatility at the end of the day, you could just take the position long or take the position short, depending on how you like it, or you can wait till the news prints. Basically, my view is, I think unless the news is just completely in line, there will be continuity, good or bad, and that continuity will probably be for at least 20 to 50 Nasdaq points. So just to give you an idea, if you're trading a $50,000 account, all you need at 10 contracts is 30 Nasdaq points of continuity, and you've passed it. You can pass the eval in one trade. The best way, in my opinion, is to wait for the news to occur, figure out if it's positive or negative, wait for that one candle, and then assume that the second candle is going to have some continuity as everybody gets on board. Now, of course, if Nvidia prints in line, or there's nothing, there really is nothing shocking or surprising about it, you might not get the price action, but it's definitely worth it, because this is one of those kind of events that definitely creates the opportunity for one and done pass eval. Let me see if people have any questions for me. Okay. Oh, thank you, Frank. Frank says he can't speak English, but I'm his favorite. Well, Frank, maybe I'm going to talk in pictures, so maybe it'll be helpful for you when I talk. We got about 9:15. Let me put the trade pop on here. I probably should take this trade. All right, I'm going to get long here. I'm a little bit late on this trade, but I'm going to explain to you what I'm doing, why I'm taking these trades, and see if we can get them to work. So what you see here, right, is a trade below the moving average that's starting to move back up, and we have this following pattern, which is a low and a higher low. So the trade should have been at around 98. I entered my trade a little bit late at 99, but that's okay. This is very much that U pattern that we love to trade underneath the moving average. The basic assumption, and I actually, hang on a second. I'm gonna we're going to leave this trade alone for a second. I'm going to take you to a link. Let me find this link over here in my, this is an amazing, amazing tweet today that everybody should read. Let me get copy link. I'm going to put this link over here. I'm going to show you, this is really worth reading. I'm going to go to Twitter and talk about this. And I will actually put this into chat so you guys can bookmark this link. Okay. So this is a super interesting summary of Steve Jobs's whole business philosophy. It's called Insanely Simple, The Obsession That Drives Apple's Success. It's written by Ken Siegel. And this gentleman summarizes everything that Steve Jobs believed in like 17 points. But I will summarize it for you into essentially 2 or 3 points. What he believed is that you should focus on one thing and one thing only. Cut the product down to its essence, right over here. Cut the product down to its essence. And what that meant was find the one thing that you think is valuable and perfect it. Perfect it. I think Steve Jobs was probably a fan of Bruce Lee, who Bruce Lee once famously said, "I never fear a man who practices 1,000 punches. I fear a man who practices one punch 1,000 times." Meaning that true professionalism, true perfection, true success comes from mastering one single valuable thing. So everybody enjoy this tweet. It's really, really worth reading. Really great stuff. Maybe even get the book. I thought it was really, really fascinating. Let's go back to trading. I want to try to tell you how I'm trying to incorporate this idea with my, what happened? Where am I? I'm on the wrong one. Sorry. I want to go, where's my Nasdaq? Oh, Nasdaq got done. Sorry. While I was talking, did I get done? Let me just make sure. Hang on. Sorry. Let me put on my glasses because, that's, yeah, I got done. Nice. Okay. So while I was talking, the trade got done. We made money. Shit. Where's my, hang on a second. I'm sorry, guys. I marked this up nicely for you. So I really want to, oh, here it is. Okay. Perfect. Okay, good. All right. Let's look at the chart. So with that in mind, I just made $100 for you guys on this particular trade. But what I want to explain to you over and over and over again is what is this trade, the scalp trade that I like to do, why I like to do this, and why I have refined it to just its purest essence. All right. Does that sound good? Give me some yeses in the room. Let me know if you're interested in hearing about this. Let me see what you guys are saying in my room here. Okay. Anybody else? I need 5 yeses because it means I need people to be awake and alive for me to come in here. So I got 3, 4. I'm not talking until I get another 5. Somebody, you guys, there we go. 4 Seasons Kennels. I love that. I love that handle. I love that handle. All right. Thank you, Raymond, Susan, everybody, Lara. Thank you. You guys are great. I'm glad everybody's involved. All right. So I marked the Nasdaq chart as just a sample chart, but this is applicable to Dow. It's applicable to gold, anything, right? So the first order of business that I kind of want to talk to you about is I want to trade long only, right? It's not that shorts don't work, but in order to clear my focus, have a pure focus of the setup, practice the setup until it's perfect in its execution, choose one side. And of course, the reason I choose the long side is because equities are a long bias product, right? Equities are a perpetually upward moving product. So the long side, if you look at all the data, long side, trading equities is like flipping a coin, 55% heads if heads was up and tails was down, right? 55% of all stock market days are up, 45% of stock market days are down. That's why the stock market goes up, right? It's a rough estimate. Some years it's wider, some years it's narrow, but basically there's always an upward bias. So that is why I always want to choose the upside, right? Even on the worst possible days, I just want to choose the upside for now. We'll maybe, a month or two from now, we'll talk about the short side, but let's focus on the long side as a starting point, right? Now, that's true for equities, but also now true for gold. Gold is at all-time highs. Gold is in a permanent or perpetual bull market right now. So gold is the same thing. I'll show you gold in just a minute, but same idea. Let's just focus on the long side, right? And then the question is, what is the absolute essence of what we want to do on the long side that gives us an edge in scalping, right? And that essence can be shown over here in a whole bunch of trades. Where's my mouse? By the following assumption, right? I'm going to just simplify this setup to its absolute core basics. There is no prior highs or lows. We don't care about global trend. We don't care about daily trend. We're going to just act in a state of suspended animation. It's what's called a pure Markov chain. They'll just be, we're going to take input from the nearest information and assume that input has predictive quality, right? And what we're going to do, so I've eliminated all the complexity. I don't care about prior highs. I don't care about looking at any price action. I just want to look at one thing. 8-period SMA. And again, the reason why we're trading 8-period SMA is just because it's a short period SMA. There's nothing mysterious, unique, or magical about it. I like the 8-period SMA. It works. We don't need to reinvent the wheel. It's a short-term SMA. That's all it is, okay? So price drops below the moving average, right? And we are looking for the following candle pattern. We're looking for first candles to create a little bit of space between the moving average and the candles, meaning that there is some corrective action going on, right? That it's not just hugging the moving average, it's just a little bit of space, right? Although I will tell you, on a strong uptrend like over here, you could kind of cheat and use it. So I like space, but space is not the absolute determinant. What is the absolute determinant is I need to have, after it breaks the 8-period moving average, a higher low. This is a lower low. This is a lower low. This is a lower low. This is the first candle over here that creates a higher low. It's the first candle that gives me this nice little V-shaped pattern, right? We're coming down, and then with the first candle that gives me that little V, right? The U. Everybody see that? Give me some yeses in the room that you understand the basic concept. You must have lower low, higher low combo. Space is also not a prerequisite, but a nice to have between the moving averages. Let me see how you guys getting it? Okay, so there's nothing more complicated than that. What is that predictive of? It's predictive of like fish swimming to the ocean surface. It's predicting of prices coming back to the moving average, right? We're hoping that they go up, like a school of fish, right? It magnetizes to that thing. Now, of course, in a strong uptrend, that pattern is just money. It's just money. And if we can catch a 2-hour rally in the Nasdaq, it's just every turn to the moving average is a winning trade. And what is the trade? What is the trade setup here? The trade setup here is a 1-to-2 risk reward ratio. So it's $100 risk, $200 risk, $100 target on Nasdaq. And we're going to make it the same way on gold, and we'll make it like $50 risk on the Dow. It's basically 10 points on the Dow, 20 point stop, 5 points on Nasdaq, 10-point stop, $1 on gold, $2 stop. You have to have a wide stop because of the natural volatility on an intraday basis. It's just you can't time it perfectly. Although in these particular cases, you literally have there's absolutely no retrace, but you have to give yourself a little room. I'm not doctrinaire about a 1 to 2 risk reward ratio. Maybe as we get better and as our timing gets better, we might be able to really whittle it down to as little as 1 to 1 or 1.5 to 1. It's always the intention to improve the mastery of the setup. But for now, let's give ourselves the breathing space, right? Because what we're trying to do is hit 3 out of 4 trades. We're trying to hit 75%. We're trying to do 3 winners, 1 loser, 6 winners, 2 losers, 9 winners, 3 losers for net positive P&L. Okay, that's the basic assumption. So if you kind of mark out what I'm showing you here from about 5 o'clock in the morning when I started, or 6 o'clock in the morning when I started trading, whatever, you can see that you have the first pattern here. Sorry, and one last thing. Oh no, actually, let me run you through the trades, and then you'll understand right away. So boom, winner, chicken dinner, boom, winner, chicken dinner. Boom over here does not hit my target. This is a trade I took. It looks like it's a pretty good trade, but it did not quite hit the target. Because let me show you what happens. Let me get rid of this. With drawings. I'm sorry, guys. I'm sorry. Damn it. I made the wrong mistake. Scalper. Oh, super scalper. Sorry. I just got rid of my indicator by mistake. Hang on. I gotta put it back on. Okay. Now I have to reconfigure it. I'm sorry, guys. You're gonna have to just bear with me a second. I got to reconfigure the whole thing. I just clean it all up. Okay. Oh, I got rid of all my. So sorry. I got rid of all my beautiful marks. So let's do it again. This is a winner. I'm going to make it green. This is a winner because it dips below. This is a winner, and this trade over here. This is a proper trade. We're coming in at 450. We're looking for 5 points. It doesn't make it. It goes to 850 and then dies. So this trade becomes a loser, right? Now, what do we do when we have a loser? Nothing. Just wait until you get a new cross over the moving average, which in this case is like over here. This moves over here. Until you got stopped out. Just wait until price waves itself back up, splashes itself up back above the moving average, and only then start looking for the new setup. So once you have that, then you have the new setup over here. This price comes in 94, and we're looking for 99. This pretty much does it over here. But let's imagine it. Just for argument's sake, it doesn't quite do it. You would get, you wouldn't get stopped out because 84 is your stop. You just flow, and you would get done over here, right? So the very important point is once you get stopped out, wait. Don't jump back in the water. Wait until the water synchronizes with the upward flow, right? That's what you need to do. That's really the only other thing. So what time is it? 9:30, where market is opening up. While I'm talking, I missed this opportunity, but it doesn't matter. I wanted to kind of run you through the setup. Now that you guys understand the full setup, this would have been the proper trade for us over here. This trade over here, had we come in, and we'll be looking for this kind of a setup all the way through. So that's it. It's just that idea, and if you do it, it basically offers you, especially during hopefully high volatility times, chances like 4 or 5 chances, 4 chances an hour, per instrument. So if you're trading 2 or 3 instruments, you certainly have some opportunities here to find it. Right now, I got nothing over here in the YM. I got nothing over here in the S&P because it's, it's S&P is really, really quiet. And as I said, what I really, really like is this kind of a, and we have gold just dumping. So gold actually now creates an interesting opportunity. Gold is the one trade that may be able to set up for us. Now, gold has just been a big dumpster fire, right? But let me show you a good example. Let's suppose you took this trade, you got stopped out, you waited until it goes back up above the moving average, right? Switches over, and then you would take this trade over here at 13, and boom, boom, boom. You're just taking a dollar for two, and boom, 14, you're done. You're resolved, okay? You are resolved. Now we've made a fresh wave above the moving average. Now we're below the moving average. I'm actually looking. I mean, this is kind of an ugly trade. We're going to make 10, 20. We're going to give gold $2, $1 instead of $7.15. We're going to do this way, and I'm gonna bite the bullet here. This is a lower high. I'm gonna buy it, and we'll see if we can get $1 out of two risk here, because this is a lower high and it's moving towards the moving average. Let's see if we can put into practice what I just showed you in charts. Now, obviously, the red candle means that there's a lot of selling going on over here, so there could be pressure on us. But we're hoping that there's a little bit of a bounce. We hope that just like a school of fish, it swims to the surface. The price swims to the surface of the moving average. All right, I'm going to flatten out at 90, just because it was close enough, and it actually hits my target. Again, just over and over and over again. Let's practice the same punch 1,000 times over. Okay, so 200 to the good. Now we got nothing to do. Now we can just sit here and twiddle our thumbs. Price is above the moving average here, so we're not interested. On the YM, we're dicking around. YM is just really, really quiet. And NAS, the trade, we had the trade here. We could have had one more trade here, but we were talking, and that's fine. Part of this is education. Part of this is trading. So, 2 trades for the setup. Do I ever get 2 contracts, leave a runner at break? So great question, Evan. Great question. And there are literally 1,000 different ways to make money out of this setup, right? There is, like you said, buy 2, let a second one run. Because remember, if you're buying underneath the moving average and you're catching an uptrend, right? There is 4, 5, 6, 7x on the table that I leave all the time, right? I absolutely leave money on the table. And the reason I do this is because of my own personality. It's got nothing to do with the setup. There are guys in my room who day trade with me every single day that mint it, that take 10x trades all the time off of the setup because they have the personality to hold, right? I know myself. I know exactly what I'm good for. I'm good at scalping, right? I'm obviously good at writing strategies and understanding how price works. But when it comes to my personal trading, what I personally am good at is I'm good at scalping. I am like a pigeon. I will pluck, pluck, pluck. And if you ever watch pigeons on the city streets, everybody, like even no matter how close you come to a pigeon, you can never kill them, right? They always fly away. They always fly away at the last minute, right? You can never kill a pigeon. I mean, unless they're weak and infirm. But the point being is that pigeons are actually very, very interesting animals. They will pluck, pluck, pluck tiny, tiny bits precisely because they're always mindful of not being greedy and getting run over by a car. So I am the same way. I will never get hit for a $5,000 loss because I'm gone. I take my profit, I'm gone. Take my profit, I'm gone, right? Now, if you have a different personality, you absolutely can modify this setup 100 different ways to Sunday. You could modify the setup, with like 3/4 at 1. We can do 5 lots and then 3/4 at 1. It all depends on how you want to run it, how you want to trade it. I like to trade small risk, small reward, very, very, very high consistency, and try to just master it and get a $300 to $500 hour. Basically, that's what I want to do. It's a $300 to $500 hour of real life, real market trading. As you guys see, every time you see me trading, I'm not bullshitting here for 3 hours telling you about my life story and then make one tiny little trade for a tick, right? You guys see, we trade all the time if we got the legitimate setup to make it happen, right? So, yeah, your question is a great one. There's lots of different variations on the theme. I'm just showing you the primary component, the underlying element that makes it viable, and then after that, you can do a ton of different stuff. And remember that you're going to be in a the other thing, by the way, is like, let's say like right now, right? I'm watching this particular setup. Let's say you don't have a lot of confidence on the setup. Let's say we've seen this story so many times before, right? So I'm gonna show you something interesting. It doesn't even matter. Like I'm glad I didn't even pull the trigger. What I was gonna say is, if like in this particular case, right? Between 9:30 and 9:45, we've seen the story before where it runs up and then it really just kind of like collapses. That this gives you a fake entry, right? And if you want to scratch that itch with an entry, but don't necessarily have a lot of confidence because you've seen this fake out a lot of times, you can do it with a micro contract. I will very often just try to trade a micro contract to see if I'm in the rhythm with the market, right? You don't have to make every trade the big trade. You can just trade it, especially if you've seen the bullshit the market, the games the market plays with you all the time. At this particular time, this 9:30 to 9:45, full of gamesmanship where they give you bullshit numbers. So like right now, this next candle, if it holds bid, probably halfway decent candle, maybe worthwhile trading. But because it's this bewitching hour, I'm probably going to trade micro just to see if I'm in rhythm with the market. So there's like a lot of different ways that you can customize this for yourself. I'm looking for the Dow is up. Now S&P is down. S&P needs to come down and create some space before it comes back up. I will trade the S&P to the upside if I can get it. So gold is a viable trade for us. I'm watching gold here, 17 seconds. You see gold has a higher low here. It's consolidating. If it works, it works. And maybe, you know what? All right, screw it up. I'm kind of mildly bullish gold. So let's go 10. Stop loss. Okay, let's see if this works. Let's just see theoretically if this works. I'm kind of mildly bullish gold. I probably would have pulled the trigger, but it's a kind of a negative sloping. I still think it's actually a pretty viable trade, and probably going to work. So there we go, and it does work. So could have done the full contract, but still a good trade. We're still making 3 for 3 trades on this move. Let's see what's going on over here. And you see, look at this. Look at NAS, right? NAS would have been just a complete fake out. Like, this is what I'm trying to tell you is that when you've traded, the setup is great, right? But you got to know when the market lies to you. There are always periods of time when the market is just going to lie to you. Like, this is the 9:30 to 9:45 time is when you have the biggest. I'm trying to find the where's the rectangle? Here it is, rectangle. This particular time frame, just a huge lie, just a huge lie. So now we're turning negative, okay? And now I'm going to get rid of this. You guys can see it. And now it kind of gets interesting. So let's see what's going on over here. So I'm also watching the S&P because it's also another one of my favorite trades. It's not very, very clean and clear right now because it's just, just bouncing around. But they did buy the kind of buy the bottom here. So I'm watching this candle, and if it's a higher low, I will probably trade the S&P as well. So let's set ourselves up here for the S&P. Dow's trading strong. Nas is all right. I'm going to take the Nas here. I'm going to take the Nas here on just a small contract, just to get a little, just get a vibe on this thing, because we've sort of already kind of crunched to the downside. But this is clear higher low, and we just need to make 5 points, and we've done. And now we're 4 for 4, and now we're 4 for 4 on the trade. So good, So now the setup continues to work. Now we got nothing else to do. Now we got to wait for the price to clear the moving average, come back down below. Nasdaq is basically a done trade for us, I think. For the next 15 minutes, whatever it is. The S&P, I think I missed the S&P. Yeah, I mean, you can only do one trade at a time. I wanted to take the S&P here because this is a higher low over here. That would have been a nice clean 40.50 to 41.75 would have been a nice clean trade. So there is no shortage of trades as long as you focus on the right conditions, right? There's literally a trade every 5 to 10 minutes, and if you got 3 or 4 instruments, you should have the opportunity. The one thing I will say about kind of scalping like this is what's really helpful for me when I do this for myself is I literally only have Nasdaq and gold up and down. I have like a big screen. I have like a double screen on the side here, and I just trade two instruments. If you get right now, I'm trading lots of instruments with you because I want to show you every opportunity that, where the setup occurs. But it's it goes to, it's too much to do more than 2 in my opinion, as far as just keeping a track. You hung in there with a long gold. Good job, Sweetwater. Does discretion ever come into play, or do you just stay rule-based? I stay very rule-based. You just saw a little bit of discretion. The discretion comes on size, Dale, right? Discretion comes on size. If I'm not vibing the trade, I may do smaller size, right? But I really stay rules-based on the entry. Now, lots of people have great discretion on the exit, right? I stay rules-based on entry and exit because I'm just, I know myself, right? I need limits. But lots of people who have far better discipline than I do have lots of discretion on the exits. And you saw Sweetwater right now killed it. This is my favorite time of day. Ryan is asking me, do I have a favorite time of the day? This is my favorite time of the day. This is when sort of basically now until 11 o'clock in the morning. Like that's a sweet spot. It's a great spot. There's actually, you guys want to know what the good times are, like to trade, what I consider to be like sort of sweet spot hours. So let me see if I can, I wonder if can I type it in here? Oh, look at this. I got my screen over here. Okay, let me type it in here. So what I would say is gold, and this is all in New York time. I would do 4 a.m. until 8 a.m. on gold. That's a sweet spot for gold. It's the best time to trade, right? You want to trade Nasdaq? I think that's the great time is 8 a.m. again until 11 a.m. New York, right? Same thing for the S&P, 8 a.m. until 11 a.m. New York, right? Now, there's also, I think, a very productive time to trade in the afternoon. So whether, if you're on the West Coast or you know, if you're in Europe after, you know, you come back from home, right? Because Europe closes at noon. You guys are home for, you know, trading at the bar, trading at the pub. 6 p.m. New York, 6 p.m. London is about 2 or 3 in the afternoon New York. And I think there's this very, very sweet spot for equities, just all equities, between 2 p.m. and 4 p.m., the closing hours, where you're going to find a lot of these setups, you know, a lot of that kind of continuity setups that work really, really well. So yeah, I mean, you know, this, so now we, by the way, we cleared the moving average, right? We cleared the moving average. You're seeing the chart. So now we can look for a next dip below and, you know, dip above as a potential trade. Let me get back to charts. So we cleared the moving average here. The Dow is dipping. The Dow could be an interesting trade for us. Let's take a look at the Dow. So the Dow is making lower lows. So, you know, I'm switching instruments like a maniac just to get everybody to see the setups. So far, I think we're 4 for 0, right? On setups, which is exactly what we want to be. The Dow now, I'm just looking for a higher low on the Dow. And this is obviously a 10-20 trade on the Dow. Any more questions, guys, in the chat room? Let me know. Did I freeze up? It looks like my what's going on over here? It looks like my live is not. Are you guys seeing me? Can you? What's happening here? I'm good. Okay, it must be my. You guys seeing the screen? Everything else? Thank you. All right. So we have a higher low here. Let me just mark it up. See, this is a higher low. Should be a green one. About 6-7 seconds left. I'm going to be patient. 4 or 5 seconds. 3, 2, 1. Let's go buy it. All right. So now we're long. We're looking for 92 on the Dow. Looking for 92 on the Dow. Right. That's a higher low. Sort of our, you know, classic setup. Let's see if we can extend. If you want to look at the DOM, by the way, TradingView has like this new little trick. If you click this centers the DOM, the depth of market ladder, so you can kind of watch it if you want to do on the center. So, you know, we're at 92 on the offer here if you want to watch it. I'll have an espresso while we're watching it. So, you know, while we're kind of thinking about all of this stuff and, you know, moving around, I'm going to flatten out of this thing. I don't like to trade. It's kind of, you know, one of the things that if somebody's asking me what is my discretion. So the one data point I can tell you that I think is kind of valuable, and this may work still, but, you know, I'm looking at the price action. It kind of looks shitty. And it's doing the curl over here. Is if you haven't taken profit, or if it's not in profit after a minute. Oh, of course, you know, fuck, I always give it up too early. You know, now it probably hits target. We're 92, right? So yeah, it probably hits target. I panicked a little bit, but that's fine. You know, it's still we're still at basically, you know, 4-0 for the day. Could have been 5-0 if I held it. But what I was going to say is, it's a minute, 2 minutes. 2 minutes is the maximum time for profitable trade. I probably should have given myself 1 more minute. That was my big mistake. You want to give yourself 2 minutes per trade because that is the resolve time. That's the sweet spot of resolve time. Sorry, guys. I blew 1 out of 5. So, you know, we're basically 5-1, I guess, if you want to call it that way. But anybody bank on that trade? It's a 20. It's a 1020 stop target. So we were in at 82. Target was a 92. Stop was 62. You got that, Ali? I don't trade Nikkei 25. Okay, so great questions. There are no markets for which this is good for, except gold, Nasdaq, S&P, Dow. And that's because all the other markets, maybe DAX if you trade DAX futures. The reason why is because Nikkei is 1,000 miles wide. The Nikkei spreads, well, let me put it this way. I don't trade Nikkei because the Nikkei index is really, really wide. But if you think you can accommodate for the spread and make a viable trade out of this, then definitely do it. I just, from my experience, I think the Nikkei is just too wide a spread. The tightest, most liquid market in the world is the S&P. The next one after that is Nasdaq, and now gold has gotten very liquid. Gold is really, really liquid. It's certainly, it's 10 cents wide on every trade, right? So speaking of which, let's cycle through here. Let's see, we got Nasdaq is well above. We got no trades here. I think the S&P is well above, no trades here. Gold is kind of hanging, doing nothing. I'm watching gold. Gold worked twice for us. It worked here. It worked here. We took it on the smaller contract. So there was like 4 or 5 gold trades. Now gold is kind of not a trade for us on this move. But you see, basically we've been trading for about half an hour. We had 5 trades, right? So if you sort of say to yourself, okay, I'm going to trade for 90 minutes a day. I'm going to try to find between 5 and 8 trades. Let's just for argument's sake, let's say I'm going to do 6 quality trades in 90 minutes. And if I am good and a little bit lucky, I'll be 6 and 1. Or 7 trades, I'll be 6 and 1. If things are okay, I'll be 6 and 2, which means I will be still net 2 positive, right? If I'm 6 and 1, I'm actually 4 positive. If I'm 6 and 2, I'm 2 positive. And worst case, if it's just not a good day, I'll probably be around 6 and 3, break even. And that happens. So you're not going to always have a great day, but just think about the consistency of doing that. It's just incredibly attractive. The whole point of day trading is consistent winning days, not some bullshit setup that you cannot replicate. Anybody who has seen me do this can do the exact same thing. There's literally no variation on the entry here, right? It's a really, really clean entry setup and pretty clean exit setup. So I'm making donuts, guys. And it's the same donut every single day. And there's a lot of money in donuts, a lot of money in making, quality, similar donuts. So that's what we try and do. All right. Any other questions for me? If I watch the SPX chart, will be the same. Why are you watching the SPX chart? Ren, I'm curious. Steven says he likes donuts. Leafy, you trading Nikkei? I don't know. I'd love Leafy. Come back to me next Tuesday, Wednesday. Come hang out with us, or come join us in live. I'd love to know your experiences on the Nikkei. Put this in play on Nikkei. Let me know how it's trading. How much capital do you need scalping what I'm doing on Nasdaq? Okay, so great question. So if you are, there's a whole bunch of different ways you can trade, right? First of all, if you're a non-US resident, if you're a resident of anywhere else but the United States of America, you can open an account with our favorite broker, which is 8cap. And let me just find the link here for a sec, guys. Let me get all my links. Okay, I'm going to put this link in here. You can get, if you open an account with them, you get all of my indicators, everything that we do here, and access to my live trading room for free. So the thing about that is because CFDs are completely customizable. You can trade it as much as 1/100th of a Nasdaq. You don't need any more than $1,000. But what we always recommend is between $5,000 and $10,000 starting capital, and you basically do $100 risk, $200 $200 risk, $100 reward. If you're at that kind of a level, just think about this. If you're net 2, net 3, meaning you've won 3 positive trades for the day, you're plus 300 on the day. That's 1,500 a week on a $10,000 account, right? That's really, really good. And that is more than enough capital, more than the kind of risk and reward I'm giving you and the kind of ratios I'm giving you. There isn't a broker in the world, but certainly ACAP that will, let you trade on that kind of size and stuff. When it comes to futures, I don't have a futures broker, but the futures broker that we use in America called AMP Futures, their margin for Nasdaq large is $1,000 for one contract, right? So again, my rule of thumb is you want to use at least 4 to 5 times margin. So again, $4,000 to $5,000 per one contract, and that's what I would trade. But you only need $1,000 actually to trade the size and the structure that I'm showing you. And then of course there's prop trading, and this is what we're doing right now. We're trading prop for Apex, where we're trading, their evaluation accounts. So this is a $250,000 account that I'm trading right now. I'm trading at small size, but again, the whole point here is to trade the eval the same way that I would trade my real account, because when you're trading the real account, you have very, very strict risk parameters on all those accounts, and if you're trading the way I'm doing it, with 1 or 2 contracts, you well ahead. You are a pigeon. You're never going to get hit by a car. You're always going to escape risk because you're not margining yourself to death. So hopefully that explains it for everybody. What broker do I want to use for US res? Well, if using futures, I recommend AMP Futures. If you're using forex and you want to trade forex, then probably Oanda. And if you're trading prop, Apex. That's our boys. Is Apex. Okay, look. We got one interesting trade here in gold, right? Gold is dipped below. This doesn't have that that little shadow underneath it. So we'll do. Hang on, let me go back to my trading screen. We'll just trade small, because again, I want you to see the setup. You get comfortable with setup. 27 seconds left, so I want to get myself organized. 10 and 10, 10 and 20. And remember, guys, by the way, I said to you that 1 to 2 is the maximum risk that we want to allow. Maybe as we get better, we might cut it down to 1.5 to 2. We'll have to see as we get more sample size. But right now, anyways, we're going to take this trade because it's a higher low off below the moving average. Oh, and we get swapped. Wow, and that happens. That happens. It was a good setup, but the market faked me out, and then that happens a lot of gold. That's why I kind of went small on this precisely because it didn't have that whole space underneath, right? It didn't really dip below the moving average, so didn't give me enough space. But again, boom, I'm out. So first clip of the day. 4 to 1 on the trades. This is the first clip on the day, but I took a tiny trade precisely because I was making a very, very clean read that this was not the optimal trade, right? I just took the trade because I wanted to show it to you, but it wasn't the optimal trade. Let's see what's going on everywhere else. Still very, very quiet. Could have taken this trade over here while I was talking, actually. Sorry, there's always lots of opportunities here on our desk. Let's see what's happening on the S&P. S&P is starting to come in. I'm just waiting for the. Okay, so the S&P is dipping below the moving average here. Let's see if I get a little bit of a correction here and a higher low. We are getting to that time, which is 10 o'clock, where we're starting, where the 9 to 10 o'clock rally is starting to peak out, right? And this is why I'm always very, very wary of buying the dips here unless I really get a great setup. Nothing on the S&P here. Dow is starting to come down. Maybe Dow will give us a trade. So one of the things that I kind of wanted to, tell you about is you see how important it is for the most part. And it never works 100%. Nothing works 100%. How important it is to watch the lows, because they are the clue to supply and demand. They're the clue, the most immediate clue to where the traders are putting their bids. If they are trying to buy it at a higher low, there's very strong likelihood they're gonna try to run it, right? That's how it works. Just kind of like moving it out. So gold now is starting to really come in, starting to build that space that we talked about. So we're gonna see if we can get a trade here. Nothing on the S&P yet. Gold prints a red candle. Low is 55, low is 56, just one above here. Now the thing is, this is really not a setup, and I'll tell you why it's not a setup. Because you see the actual, oh no, I'm wrong. Yeah, I guess no. The setup would have been here. This would have been the higher low. This would have already taken me out. 82, this would have been a failure. So I really can't take this. This is sort of like a failed setup. And the proper thing for me to do, is to wait for a new wave above the moving average and come back to it. Like this may work, but it's not the proper thing for me to do. I'm not going to force the setup here because it's not, it's not the proper trade on the thing. Although it would have definitely helped us work here. Sorry, and I missed the gold setup while I was looking at this. I think I wonder if like next week I might have to divide my screen into two instruments. Now the other thing that's super important, right? You see me seeing a lot of setups, and I'm not taking them. Like, why did I not take this gold setup? I didn't take it because I missed the entry. This is such a hard rule I've had to learn the hard way. If you miss the entry, if you're late on the entry, don't chase it. Don't chase it, because chasing the entry, it's just the same thing as taking the wrong trade, right? It doesn't matter the setup is there. If you weren't there for the setup because you were doing something else, there'll be another setup. Because chasing the entry means I would have been out here and I would have been stopped out, right? Stopped out very often into a trade that could have been positive because I would have put myself into a bad position. So really important not to do that. And I'll try to focus much more on trades here. Now you want to play, if we want to play around a little bit, just for shits and giggles, we can trade the micro here for if it holds the bid here, right? If it holds the lows here, we can try to just have fun with it. Sometimes you just want to, if you want to just have fun, and that is literally what the micro is for, to kind of to practice your swing. And it's really, wow, it's really flipped around now. It's nice. It's fine. We'll hang in there. So this is a higher low. 13 seconds left. I'm going to wait, let the candle complete. And we know this isn't our setup, because the setup was over here. It failed. Now this is the first time we're crossing the moving average. If this kind of closes above the moving average, the next setup will be our setup. But I'm taking this trade as kind of a shits and giggles trade for us. See if we could stretch it out. And one of the reasons why you kind of want to take these trades is to actually prove to yourself why you don't want to take them in size. A lot of times they're going to fail. They're going to fail a lot more. So if you need to scratch an itch on a less than 100% confident trade, or less than a fully confident trade, do it on a small size. Just let it play out. Because as I said, the way the setup here is, this was a failure. We now wait for this thing to close above the moving average here, and then come back again below and above. And the next trade, that would be our next cycle in the trade. So right now we're just kind of rushing it because I got nothing else to do with you guys, and I know you guys want to trade. That's a lot of fun. Gold is diving, right? Gold is just massively down. So there's no trades on gold here, and we will. We'll have to, the proper trade on gold now is to wait for it to come back up above the moving average and then see if we can get the reversal, right? We don't have anything else to do on gold. S&P is actually kind of holding in there. Where am I on this? And on YM. So we can have the YM fun. But the 79 is a target. Let's go to the DOM. Let's go have fun on the DOM. Let's see if we can get swept at 79 here. Yeah, the 10 o'clock reversal. That's exactly right. Yaba Mocha Frap. I love your handle. The 10 o'clock reversal is a very common thing. That's why you see me trading very cautiously, kind of not really doing this. And then, by the way, at 10:30, we pick it right back up. Right, the flow comes right back. We got that 10:30 to 11:30 flow, and it's a pretty good flow if we can find it. So there's definitely opportunities there for you guys after we're done trading. All right, we're putzing around on this thing, trying to see if we can get 79 out of it. Curious to see what's going on with gold. Gold is really dumping. Interesting. Gold. Gold. Something is happening here. There's like a big liquidation. When you're getting these 3, 4, 5 candles, that's a pretty serious sell-off here on gold. Now they're taking out to the 24 handle. Oh, did we get done? We got done on the YM. I always, honestly, guys, I'm very superstitious. I hate watching the DOM. I hate watching the chart. What they say, a watch pot never boils, right? Is that the statement? A watch pot never boils. Well, I always believe that a watch chart never takes profit. If you just lay down the trade, look at something else. That's why a lot of my trades you'll see will get done off screen, because I hate fucking watching them. It's a curse to get done. So good. Let's review the TPs. So we had one in the Dow. Let's see, yeah, one in the Dow. Then we had another in the Dow, I believe. This one was a scratch. So one scratch. Then Nasdaq was 2, right? There was a 2. Nasdaq. Was there S&P? There was no S&Ps, and there was 3 golds, right? 3 golds, and there was. Let me see if there was anything else. Yeah, there was four S&P. So it's 1, 2, 3, 4. Was there anything on the S&P? No. There was this. We already counted that one. And there was 5-1. So this was the one losing trade. This was the one legit to trade. So we had 5-1 losing trades. Not bad, right? That's exactly what we want to be. I mean, 6-1 would be ideal, but 5-1 as far as the setups, it's a lot of trades. Six trades in about 45 minutes. Pretty good. So and that on top of everything, on top of yesterday where we were 7-2. So if you counted, that's 12-3, which is, what is that on my percentage basis? 12 divided by 15. Shit. 80%. I want to be at 75%. Between the 2 days, we're at 80%. So pretty damn good, right? How do you feel about shorting gold? So, I talked about the idea that really for the next probably month, all we want to do is practice the long side, right? I don't want to be bi-directional, because one of the biggest mistakes, in my opinion, of every trader is too much trading, too diffuse. I already have way too much focus. We're already trading 4 or 5. We should be trading just gold and Nasdaq, right? Nothing else. But people want more trades. You want 5, 6 trades for my live trading sessions. I want to give you that chance. So I'm already at a disadvantage, and I don't want to be at a double disadvantage of trying to trade both sides of the market. You just lose focus. Let us make, we made 12 trades or 12 winners in 2 days. Let's get to like 50 winners in a month, and then I'll come back and I'll trade the short side with you. Okay, then we'll work on the short side. So that'll be my promise to you. Those arrows are crosses of the 8-period SMA. Which arrows you talk? Oh yeah, no, these little arrows, those are entries. Those are actually entries of my trades. Is this what you're talking about? Those are entries. I bought 11.5, sold 12.4. I bought 14.4, sold 13, because this was the one loss here. Here's I bought 82, sold 80 on the flat side. I bought 79, sold 4 over here, right? So yeah, all those things are entries. Okay. Oh, flames, arrows. Oh, those are that's something we'll save for next week or the week after that. I'll explain to you, what those symbols are and what they mean. They're just informative right now for us, but they can also be part of a different trading strategy as we go along. Look at the gold. Gold is just, and by the way, this is the final thing I want to, share with you. This is why you don't double dip, right? To paraphrase George Costanza. If you get stopped out on a trade, don't try to buy it again and buy it again, buy it again. It's just walking the moving average. You're just being the sucker that's buying the dipping knife. Wait for it to flow back up. Wait for it to reflow back up. If it ain't coming back up, you shouldn't be trading it on the long side, right? That's the beauty of just not, of not double dipping. I think I've made enough Seinfeld references today. Anyways, guys, thank you so much. Do not forget, I have one last day for my futures course, which starts tomorrow. I think Kathy put the link up there, and if we didn't, let me go find it. I wonder if she did it. She probably didn't put the link up there. Hang tight a second. I'm gonna find the link before I let you go. So if you guys want to join me in my futures course, you can definitely do it. Where is my thing? Oh man, I can't. Email. Okay, sorry. Let me just find my email. I'll get it. In the meantime, feel free to just post up any questions you guys may have. and I'll be happy to. Oh man, I'm sorry, guys. This link. Anyways, you wanna do the futures course? Just hit me up at contact@bktraders.com, and I'll get you the special discount for it. Okay, because we still have like 1 day left before I start tomorrow. Otherwise, absolutely get the Apex. Get the Apex right now. Lock it in, because that's just the best thing. And also, actually, if you want to join me at Pass the Prop, which gives you everything, gives you these indicators, gives you live trading with me, and gives you coaching with me. I'm going to put this in here one last time for anybody who wants to join me. Here's a discount for that. Okay, Pass the Prop Academy. All right, guys. I wish you the best of luck, the best of trading for the rest of the day. Good day. 5-1 today. 7-2 yesterday. 12 out of 15 for an 80% win rate over the 2 days. So looking really, really good. Okay, guys. Everybody have a wonderful day. I'll see everybody next week after the holiday. Okay. Take care. Bye bye.